What if I told you there's a NASDAQ company that owns 2 million Solana tokens worth $334 million, generates $47,000 daily in staking rewards, has 45% institutional ownership, and yet 31 sophisticated institutions refuse to sell a single share over 12 months, despite the stock falling 72%. Today we're analyzing UPXI, potentially the most misunderstood asymmetric opportunity in crypto treasury space, the MicroStrategy precedent. In 2020, when MicroStrategy announced Bitcoin treasury strategy, analysts called Michael Saylor reckless. They predicted dilution would destroy value, Bitcoin concentration was too risky, and premium valuations would collapse. They were catastrophically wrong. MicroStrategy delivered 2,500% returns, becoming a top 100 company by market cap, and consistently outperforming Bitcoin itself. The lesson: traditional analysis often misses revolutionary crypto treasury strategies. Meet UPXI, the Solana treasury pioneer. UPXI transformed from struggling consumer products to the first major public Solana treasury company. CEO Alan Marshall accumulated over 2 million SOL tokens valued at $334 million, one of the largest institutional Solana positions globally. Why Solana over Bitcoin? Yield generation. SOL generates 5.2% staking rewards. Bitcoin generates 0. UPXI earns $47,000 daily, $17.4 million annually, creating 3.7% yield on entire market cap. Earlier adoption stage. Bitcoin was mainstream when MicroStrategy started buying. Solana remains primarily crypto-native, creating larger appreciation runway. Technical superiority: 100,000 plus transactions per second versus Bitcoin 7. Sub-second finality versus 10 plus minutes. ETF catalyst: Solana ETF approval odds, 99% for October 2025. The institutional ownership revelation. Yahoo Finance reports 45.38% institutional ownership, with 31 holders as of June 2025. Despite UPXI falling 72% and experiencing 5,800% share dilution, exactly 0 institutional investors sold in 12 months. Why didn't sophisticated institutions sell during extreme volatility? The revolutionary convertible structure. In July 2025, UPXI completed a $150 million convertible offering with Genius Innovation. Institutional investors provided their own SOL tokens as collateral. Traditional convertibles rely on company creditworthiness. UPXIs are backed by SOL tokens the institutions themselves provided, creating perfect alignment. How it works: institutions give UPXI their SOL, receive convertible notes, paying 2% quarterly with $4.25 conversion price. If stock appreciates above $4.25, they convert to equity. If not, they get SOL back at maturity. Institutional benefits: downside limited to SOL performance, not management execution. Upside participation through equity conversion. 7 to 10% total yield, 2% quarterly plus SOL staking. Complete conversion timing control. Direct SOL exposure regardless of company performance. No wonder institutions aren't selling. They have ultimate asymmetric structure. Quality institutional backing. This isn't retail speculation. Major holders include Big Brain Holdings, led convertible offering. GSR, premier crypto trading firm. Galaxy Digital, most respected crypto investment firm. Asset Management, Canadian digital asset specialist. Attester Ltd, UK alternative investment firm. These crypto-native institutions understand blockchain technology and network token value. When 31 such firms refuse to sell despite volatility, pay attention. Trump policy catalyst. August 2025. Trump signed executive order allowing crypto in 401k retirement accounts. With $7 trillion in 401k assets, even 1% crypto allocation means $70 billion new institutional demand. This money can't buy crypto directly. They need regulated vehicles like ETFs or public companies with crypto treasury exposure. UPXI could see similar premium expansion as institutions seek SOL exposure through public markets. Valuation analysis. Current numbers. Market cap, $467 million. SOL Treasury, $334 million. Current price, $7.93. SOL NAV, $5.68 per share. Trading at 40% premium to SOL holdings. Scenario analysis. SOL $200. UPXI NAV $6.79, minus 14% from current. SOL $300. UPXI NAV $10.19, plus 28% upside. SOL $400. UPXI NAV $13.59, plus 71% upside. This ignores scarcity premiums, income generation, or operational improvements. The income story. Annual staking income, $17.4 million. Daily income, $47,670. Market cap yield, 3.7%. Compared to S&P 500's 1.3% dividend yield. UPXI generates 3x that just from crypto staking, before any appreciation. This provides fundamental value, floor independent of price movements. The asymmetric setup. Downside protection. SOL asset backing provides $5.68 floor. 45% institutional ownership with protective structure prevents panic selling. Daily staking income supports valuations. Convertible structure limits institutional downside. Upside catalysts. Solana ETF approval driving institutional capital. Crypto in 401(k)s creating demand channels. Scarcity premium as only public SOL treasury play. Any management execution improvement unlocks massive value. Why traditional analysis misses the point. Most analysts focus on P/E ratios and legacy business metrics, analyzing UPXI like a struggling retailer with crypto side business. This misses the transformation. UPXI isn't a consumer company anymore. It's a Solana treasury with legacy operations. The relevant framework is crypto treasury evaluation, asset backing, institutional structure, income generation, premium potential. The institutional conviction signal. Zero institutional selling over 12 months of extreme volatility isn't normal. When stocks decline 72% with massive dilution, institutions typically cut losses. That 31 different sophisticated investors maintain positions suggests they see something traditional analysis misses. These institutions did due diligence, understand crypto markets, have management access, and evaluated risks thoroughly. Their collective holding decision is among the strongest by signals in public markets. Risk assessment. Legitimate risks. Solana technical challenges, despite superior performance. Regulatory policy reversals with future administrations. Management execution failures. Crypto market volatility cycles. Conversion dilution if stock appreciates significantly. However, the institutional structure and income generation mitigate traditional crypto risks. Downside limited by SOL backing and institutional protection, while upside remains asymmetric. The bottom line. UPXI represents a potentially once-in-a-decade asymmetric opportunity combining revolutionary SOL-backed convertible structure, 45% institutional ownership with zero selling, $47,000 daily income from staking, multiple regulatory catalysts, scarcity premium potential, the institutional conviction signal, 31 sophisticated investors maintaining positions through 72% decline and extreme dilution, suggests smart money recognizes something traditional analysis misses. 4 investors seeking asymmetric crypto exposure with institutional-grade risk management. UPXI offers unique opportunity to participate in what could be the next great crypto treasury success story. The question isn't whether UPXI will experience volatility, it will. The question is whether you want exposure to what might be the best structured asymmetric crypto opportunity in public markets today. What's your move? I know mine. Alright, here's the deal. If you got value from this video, hit that like button, share it with someone who's serious about growing their portfolio, and of course, Subscribe to Stock Market Sentinel so you don't miss future strategies. Now, if you really want to go deeper, head over to stockmarketsentinel.substack.com. That's where I share in-depth market analysis, deep dives into promising crypto projects, and exclusive insights you won't find on YouTube. Plus, you'll be joining a community of investors who are just as hungry to stay ahead of the curve as you are. So like, share, subscribe, and then I'll see you inside the Substack.